Hey everyone, Simo here from Simo Equity Research. Welcome back to the channel. Today we're talking about AMC Entertainment, ticker AMC, trading at $2.87, down about 2.7% on the session. Now look, I know what you're thinking, another AMC video, but here's the thing. We've got Q3 earnings dropping in 2 days on November 5th, and I want to give you my take on where this stock is headed, because the market is completely mispricing the risk-reward here. Let me start with the brutal truth. AMC is down 99.6% from its meme stock peak. We're talking about a split adjusted high of over $700 a share back in 2021. That's not a typo. Today it's under $3. So the first question you need to ask yourself is whether this is a generational buying opportunity or a value trap headed towards zero. I'm going to walk you through both sides. The bear case is pretty straightforward. AMC lost $207 million in the first half of 2025. They're not profitable. Meanwhile, their main competitor, Cinemark, actually made money, earning $56 million in net income over the same period. AMC also doesn't own most of their real estate. They're stuck in long-term leases, which means if a location isn't profitable, they can't just walk away without taking a hit. The industry itself is facing secular headwinds. Streaming has fundamentally changed consumer behavior. People are comfortable watching movies at home now, and studios are shortening theatrical windows, which means movies hit streaming platforms faster than ever before. From a valuation perspective, AMC trades at a price-to-sales ratio of 0.2. That's a rock-bottom valuation that screams distress. The market is pricing in serious bankruptcy risk here, and with their debt load, that's not an unreasonable concern. The meme stock bag holders who bought at $50, $60, $70 are still underwater and probably capitulating at this point, which creates ongoing selling pressure. Now let me give you the bull case because it's not all doom and gloom. First half 2025 revenue was $2.3 billion, up 14% year over year. People are coming back to theaters. In quarter 2, global attendance increased 25.6% with nearly 63 million guests. That's real demand. Revenue per patron hit an all-time high of $22.26. They're squeezing more money out of each customer through premium formats, better concessions, and smart pricing strategies. Adjusted EBITDA in Q2 was $189 million, up 391% year over year. The company swung from negative $34 million in operating cash flow in Q2 24 to positive $138 million in Q2 25. That's $173 million swing. So while they're not net income positive yet, the trajectory is improving. They're also chipping away at debt. In October, they announced the elimination of $40 million in debt. It's not massive, but it shows they're managing the balance sheet. The box office is recovering. Big sequels like Superman, Jurassic World, Mission Impossible are performing well. Avatar: Fire and Ash is dropping in December, which could be a huge boost. The problem is these are all sequels. The lack of original content drawing audiences is a long-term concern for the industry, but in the near term, sequels work and AMC benefits. Here's where it gets interesting from a trading perspective. We've got Q3 earnings on November 5th. The company will report results after market close and host a webcast. The street is expecting an EPS loss. If AMC beats on revenue and shows continued improvement in operating cash flow, you could see a short-term pop. This stock still has a retail following. It's volatile. A beat could send it back toward $3.50 or $4 pretty quickly. But here's what I'm watching. The real question for AMC isn't Q3, it's whether they can sustain positive free cash flow over the next 12 months and use that to aggressively pay down debt. If they can do that, the bankruptcy risk diminishes and the stock could re-rate higher. Analyst price targets range from $2.80 to $4, with an average around $3.50. So from current levels at $2.87, you've got maybe 20% upside if things go right. But you've also got significant downside if the box office weakens or if they report a disappointing quarter. From a risk-reward standpoint, this is a highly speculative trade, not an investment. If you're thinking about playing AMC, here's how I'd approach it. Wait for the earnings report. If they beat and guide positively, you could take a small position with a tight stop loss below 250. If they miss or guide down, this thing could easily retest $2 or lower. I would not be a long-term holder here unless you have a very high risk tolerance and believe in a multi-year turnaround story. The macro environment matters too. If we hit a recession in 2026, discretionary spending on entertainment gets hit first. Movie tickets and popcorn are not necessities. AMC would feel that immediately. On the flip side, if the economy stays resilient and the box office continues to recover, AMC could surprise to the upside. One more thing I want to address. The meme stock factor, AMC still gets mentioned in the same breath as GameStop on Reddit and social media. That means it's susceptible to short squeezes and gamma squeezes driven by retail traders. If you're trading AMC, you need to be aware that fundamentals sometimes take a backseat to technical momentum and social sentiment. That can work in your favor or against you depending on the timing. So bottom line, AMC at 287 is a speculative bet on a box office recovery and operational turnaround. The company is improving operationally, but they're still losing money and carrying a heavy debt load. Earnings on November 5th will be critical. A beat could push the stock toward $3.50 or $4. A miss could send it back toward $2. I would not make this a core holding. If you want exposure, keep it small, use a stop loss, and be ready to take profits quickly because this stock can reverse fast. That's my take on AMC. If you found this helpful, hit that like button, subscribe to the channel, and drop a comment with your thoughts. Are you bullish or bearish on AMC? Let me know. And as always, this is not financial advice. Do your own research and consult with a financial advisor before making any investment decisions. Thanks for watching. This is Simo from Simo Equity Research, and I'll see you in the next one.